we're now ready to deal with year 2 of the cash book, and from your year 1 you should have actually done your stock take and established the correct gross profit percentage. If you haven't done a stock take, obviously you need to work it out by answering these simple questions and obviously ascertain the gross profit percentage. Now the next thing that we need to do is go down here, and obviously that there were balancing figures that was brought forward for the second year, and these were the figures that you printed out from year 1, and you simply enter it along here, and obviously on the right hand side as well. And when you enter these figures, the 2 columns should balance. If it doesn't balance, it simply means that you've entered the figures wrong. Now another area of adjustments that we made were prepayments and debtors and so on and so forth, and these figures that you printed out and obviously it's been carried forward will have to enter on the previous year column here. And basically there were debtors of £100, and there was prepayment for rent and so on and so forth from your sheet. Just enter it on this side, and obviously on this side when the year ends we'll have to make some adjustments if there are any adjustments to be made, and these figures on this side now will form the basis of figures actually for the third year. Right, there's another factor that we need to not forget, and obviously is the capital allowances that we need to carry forward, and this is the figure that has been brought down for the fixed and fitting, and this is the figure that was being brought down for the motor vehicle. Okay, so we're making a claim of £64 for the fixed and fitting this current year, and the £200 for the motor vehicle for this current year, and it forms as the total amount of £163.75, £164 to be charged to the profit, or if you like deducted from profit as a charge for capital allowances. Now coming back down here, obviously this now is the figure that will be for the third year, so it's be carried forward for the third year, which will obviously be entered up to here, and for the third year the figure carried forward is £600, and then obviously for the third year that figure now is up here. So don't forget to carry forward the capital allowances as well. Now we're going to look at the VAT side of it before we actually start on the bookkeeping for year 2, and carry on obviously to where we will be going for the online submission. I'm going to take a quick look at the VAT and to show you how this cash book gathers information so that you can actually submit your VAT online or offline. Now this cash book, the way it works out the VAT is basically the standard method, and that is it works out the output tax and it works out the input tax, and then obviously you have the total of your sales and then a total of your purchases. So it is actually the standard method of working VAT. Now many of you may have heard of the flat rate scheme. Well, this cash book is not actually designed for the flat rate scheme. So I'm not going to go into great detail to show you how you can actually change the cash book to use it for a flat rate scheme. And if you give it a little bit of thought, actually the cash book can be easily adapted to use a flat rate scheme. But I'm not going to go into details on to give you an illustration on how to actually change the cash book to use a flat rate scheme. But remember that it's only for people that is having a turnover of less than 150,000, and in its simplified form, if you like, the VAT is based on a standard rate of calculation. As you can see here, you can actually find out what the percentages was applicable January 2010, and obviously what was applicable at January 2011. And as you can see here, the VAT inclusive of the turnover is calculated on that particular percentage. You cannot claim any VAT on purchases. Okay, so there are some advantages and disadvantages in that, and in most cases, because you can't claim back on VAT on purchases, you might be losing out on this particular scheme. So I, for one, do not recommend that you use the flat rate scheme. Obviously, that's entirely up to you. It is easy to work out, but you may not actually benefit from the fact that you were not able to reclaim your VAT on purchases, for example, on machinery, and also on motor vehicles for businesses, and so you might lose out there. Okay, that's all I'm going to say about the flat rate scheme. Let me go back to here. Obviously, don't forget to set the dates for the new book, and I've already done some figures here of sales and obviously of goods and services that we're going to deal with. And in week 1 we've incurred an input tax of £96 that we can claim back against the VAT output tax, and so we're going to make a submission to the VAT office either through the internet or on a paper format, and we're going to submit the return, and this is the return that we need to submit because this figure here is a figure that's been carried forward from last year. The output tax of £458 that was carried forward. So if you added that £1,000 of sales here, so 1,200, then you will get that 600 odd pounds of output tax. And anyway, the £96 is the input tax the output tax. The input tax we've incurred. So the difference we got to pay to the tax office is 561.67, and we paid it here. And then the next return, I'm going to say it's in 11 weeks time rather than the quarter. That just to make things a bit easier for me, rather than flipping through all these to find out where week 14 is. So I'm going to make a submission at week 11 as well. And obviously I've done some more sales, some more expenses, and some more expenses here. And this is this quarter's return. Now we need to enter the last return here, the last figure, because this figure here is cumulative. So you need to keep a record of what you have actually submitted and then deduct that figure from the present one. So this is actually a little bit misleading. I suppose I should have said last VAT returns because it includes week 1, and you'll find that when I do the next one it will include this current one. So anyway, you put week 1's figures here, which is this lot on this column, and then that is subtracted from this, and then it gives you that 500. Yes, and so that is the amount of VAT that we need to submit to the VAT office, so we pay that. And then I'm going to assume that we're going to pay the next one at week 53. And at week 53 we've done a little bit more sales, spent a little bit more cash, and we've incurred a bit more input tax that we can claim back. And so the figures here now includes week 1 and week 11's figure, and obviously the difference is 167. So you need to look at that, and then you'll be able to find out where these figures have come from. It's basically from 1 and 11, and then that is the 1 and 11, and then 53 is that here, and then the previous return was so the cumulative return, if you like, was £96.33, and so we are claiming back the VAT £66.70, which comes from here. Right, don't forget we already claimed that other one back, this one here, £96. So at week 53 we just got that one to claim back, and rightly so, it's here. Okay, so this is it's a cumulative return, if you like. Okay, remember that. I know this is written down as a last VAT return, but remember it is actually a cumulative, so it adds up the one return and then the previous return together, and this is the amount of VAT return that is due. And if you can look at the balance sheet, the trading profit and loss account balance sheet, you find that the VAT return is £100. A current liability still owing the VAT office £100, and the balance sheets balances. So that is all there is to it, actually, as far as the VAT return is concerned. It's quite simple. You just add the returns, the last returns to each other, and then it simply would deduct that amount, and then this is the figure that you will be submitting to the VAT office, either online or offline. And that concludes this part of it for the VAT return.